So we're working on the investing section of the statement of cash flows. And to do that, we're going to start with quick study 16-7, page 665. And so if you sell an asset, cash in, you buy an asset, cash out. You guys, how's this for an answer? Yeah.
So you only need two things?
Mm-hmm. Yeah. Now, by the way, the short-term investments, because short-term would be less than a year, it's current, but that's not one of those that supports operations, okay? So, the collections from customers, now that would be an operating activity. Depreciation expense, that shows up under operations. So the only thing is purchasing the used equipment or selling the investments. Okay, and it's just a cash in, cash out from the buy and from the buying and selling of non-current assets. Sound good? All right. Let's do this. Let's do exercise 16-8. And you find that on page 6-7. Okay. So, exercise 16-8, page 6-7. Here's what it says. So what it says is, use the following information to determine the company's cash flow from investing activities, right? So what it says is just sold land costing $315,000 for $400,000 cash, yielding a gain of $15,000. You paid $160,000 cash for a new truck, $106,000 cash for a new truck. Equipment with a book value of $80,500 and original cost of $165,000 was sold for $34,000. And a long-term investment in stocks were sold for $94,700 cash, yielding a gain of $15,750. So what's the cash flow from investing activities?
subtract 34.
You guys ready for some answers? All right, here you are. All right, cash received from the equipment. Did you guys get that number one?
Yeah, no.
All right. I still, people, I've been waiting here, people are still writing, so.
Book value was 8,500 on the equipment, and lost 34,000 on that sale.
And it may be easier to see the other way. So the way it would work is, what had happened is, here's the book value, okay, and here's the cash. And you compare these two, the book value, there's the D, to determine whether it's a gain or a loss. This would be a gain or loss. So if the cash is greater than the book value, it's a gain. If the cash is less than the book value, it's a loss. Now in this case, the book value was 80,500, and the loss was 34,000. What's the cash? Is how that's where that's coming from. So they give you so the book value minus the cash is less because they sold it at a loss. Will give you the amount of loss. Okay, does that make sense? All right, you guys, everybody done? All right, let's do this then. Now, let's go on to another section of the statement of cash flows. So to sum up, what you do. So we're in the investing section, and all that goes in here is the cash you receive for the cash you pay and the cash you receive for non-current assets. So if you sell a non-current asset, it'll be cash in. If you purchase a non-current asset, it'll be cash out. And all that matters is cash in and cash out. Gains, losses, book value, none of that's relevant unless the book value is needed to figure out the cash, right? Now let's go into cash flow from financing activities, right? And it's things like issuing stock is cash in, paying off debt like retiring a note is cash out, paying dividends is cash out, okay? So let's do quick study 16.8, and you find that on page 670. that right?
No.
I'm sorry, 665. Okay, so here's how it reads. Okay, and 16.8. So here's how it reads. So, what it says is, compute the cash flows from financing activities using the company information. So, additional short-term borrowings, purchase of short-term investments, okay, cash dividend paid, interest paid. Yeah, oh, is that, Jacob, that's not a hand up?
Oh, that's not hand up, no.
All right, okay,
Put it down.
all right, no problem. It was kind of ambivalent, I just couldn't tell, all right? That could have gone either way, I thought I'd ask to be sure, and no is just fine. By the way, guys, we'll have covered chapter 16, so if you want to start the homework in class. So, and Angelica, I got your list here. I was going to say, let me just finish when we go right after class. Just because,
Yeah, no problem.
okay.
Thank you.
Brittany, you ready for some answers?
Yeah.
All right, here you are. Okay. Chandra, how you doing over there?
I'm saying,
Good? Jessica, you doing good? I see kind of.
yeah, I'm just wondering why additional short-term borrowing.
It's a liability.
Yeah.
It's just a fixed idea.
Yeah, I agree. Just trying to trip you up. It's rude. Yeah. It's one of the red herring.
I just have one question.
Yeah.
If we're doing dividend paid, how come we didn't include the interest?
Don't forget, anything that goes on the income statement will show up under operations. So interest paid is an expense, it's an income statement, that goes to the operations. Interest received is revenue, again, it's an income statement. So anything that goes to the income statement will show up as an operating issue, will show up under operations. Interest paid, interest received. Dividends received will show up as income. However, dividends paid is financing. It's just kind of something you gotta memorize. All right, so again, what it boils down to is additional short-term, any of the short-term borrowing, okay? Now, purchase short-term instruments, that'll be an investing activity, right? You're lending, when he says purchase short-term investments, you're talking about lending money. Cash dividends paid, that's a financing activity. Interest paid, that goes to the, that'll show up in the income statement, it'll be in operations. Okay? All right, then let's do this. Let's do exercise 16.9, page 670. So here's how it reads. Okay. So here's how it reads. Okay. So, use the information to determine the company's cash flows from financing activities. So, the net income was $472,000. Where does that go? Operations, right? Issued common stock, 75,000. Paid cash dividend, 13,000. Paid 120,000 cash to settle note payable, okay? At its $120,000 maturity value. Paid 118,000 cash to acquire treasury stock, purchased equipment for 92,000. So it's financing activities. Yeah.
Is there somewhere, like a resource that you know where we can find out, let's say, what each thing is? What would it be? Would it be operational? I know it's a stupid question now, but I don't necessarily know.
You know, and if you have a chance to read this,
Not yet.
it's,
Okay.
yeah, it's spelled out in some detail.
Okay.
Yeah, because all, I just, yeah, so it's spelled out in some detail.
Okay.
But essentially, you know, just the overview, if it has any, it's on the income statement, current asset, current liability, it'll go to operations. Investing, buying and selling assets. Financing, you know, the stock transactions and liability.
So, issued common stock, that would be financing.
Exactly. Mhm. Anything that shows up in the owner's equity section.
Is there like a listing of records of the financial, so it doesn't include this, and this,
The chapter goes into some detail, I don't think they summarized it. Let's see.
like that thing where the secrets is not just really helpful. Just see the whole details. I got it. I mean, some of that.
And did you write that? You
I
did.
did.
You did, okay. So, listen, let's see, something like that. A little more what you're looking for? Sure. In fact, I'll go ahead and sit on, if it, do, in fact, yeah, is it, do you have enough light? I'm gonna put this on the overhead in just a minute. All right, you guys ready for an answer? Everybody here? How's that? All right, so listen, sale of common stock, sure. Paid the dividend. Now, if you receive a dividend, that goes under operations because it would have gone on the income statement. Paid maturity amount on the note payable. Now, they're paying back, if it was the interest, if they paid it, now what the deal is, they're saying they did not pay interest. Any interest would have gone as operations, but this is only the principal. That would have gone as financing activity. Treasury stock, that's a financing activity. Purchased equipment, that's an investing activity. Okay?
Why isn't the 118,000 cash to acquire its treasury stock, why isn't that an investing?
That's what I was wondering.
Oh,
It's your own
because, you
stock
know,
still. It
yeah,
goes on your
don't forget,
statement.
treasury stock
It's
is
your
not
stock,
an asset.
not their
Treasury
stock.
stock is an owner's equity account. There was, Scott, was that you that was also thinking, I heard it from another voice, was that yours?
Yeah, so if it's on your equity statement, that's
Yeah.
your stock, and it's
So anything
Finance.
that shows up in owner's equity will show up as finance.
fine.
Okay? So now, if treasury stock were an asset, it would be an investing activity, but it's not. You're just buying back some of your own stock. All right? Does that sound good?
Just one more second.
Sure. Yeah,
If you have like a dividends payable, like you haven't actually paid yet, would that go under the operating?
that'll be a financing activity.
That would be?
Yeah, even though it's payable.
Okay.
Wait, say that again?
If it was dividends payable, that would be a financing activity. Now, by the way, for what it's worth, this is a bit of a technicality. Brandon, can you hold on to that question for just a minute? I'll bring it up in just a second. Okay, because dividends payable, more than likely would show up down there where you have non-financing, non-cash financing activities. I'll show you in a minute. Okay? All right, how you guys doing with this? You done here?
I have a question. Can you go through A through F and just tell us what each one of those are?
Sure. The net income, now that would have showed up in the operations, right?
Yeah.
Okay. Issued common stock, that's of course a financing activity. Paid cash dividend, that's a financing activity. Now receiving a cash dividend, that'll show up in your income statement, so the operations. Now when they paid cash to settle the note at the maturity value, they're talking about only principal. So the principal of the note's a financing, the principal of a liability is financing activity. Now, if it were interest, interest shows up in the income statement, that would have been an operation, but this, no interest here, it's only principal. Paid $118,000 cash to acquire treasury stock, that's a financing activity. Because treasury stock is not an asset, it's an owner's equity. Purchased equipment, that'll be investing.
So, and D was what I'm sorry.
That's a liability, that's a financing activity. Now, see if this is helpful. If you lend money, that's an investing activity.
Right.
If you borrow money, that's a financing activity.
But your interest payments still go on your,
Interest you receive and interest you pay, those
so
operations,
it's just the
principal,
principal amount.
exactly. And Scotty, and one way you want to remember that is don't forget interest receivable, interest you pay, interest you pay, interest you receive, as well as dividends received, all that goes to the income statement. Income statement operations, okay? All right, any other questions? Now, let me put this up here. I had a couple of requests for some more detail. See if this is a little bit, this is an answer to your question, okay? So, here we have operating activities, from the sale of goods and services, from the receipt of interest, dividends on loan payments, right? From the sale of marketable securities, trading, all right, those are operating activities. And outflows, pay wages, purchase inventory, pay expenses, pay interest, pay taxes, purchase marketable trading securities. Investing activities, from the sale of property, plant, and equipment, and other long-term assets, from the sale of short-term marketable securities, okay, and then from the collection of loans. And then money out to purchase property, plant and equipment, and other long-term assets, to purchase short-term marketable securities, to make loans. So if you lend money, it's an investing activity. If you collect loans, if you borrow money or pay back borrowed money, that's financing activity. So financing activities, from the sale of preferred and common stock, from the issuance of debt, and money out to reacquire preferred or common stock, we're talking about treasury stock, to repay debt, to pay dividends. So,
Yeah, thank you.
Angelica,
That's great.
you and Julie wanted this a little bit more of an explanation? Okay.
Steve, can that be available so we can take a picture of it?
Sure, in fact, you want to just come over, no, you guys are very welcome. In fact, if you want to take a picture of it, you're very welcome. We have one more topic to cover. All right, Levi, we'll see you
Monday.
Monday, second to the last day.
Wow.
The second. Well, yeah, I have to look up the number to be sure. It's, I'm very sure. It's
Coming on Monday.
Double check that.
And then we come in the next Monday.
Do you think it's gonna be on hard?
They don't make easy accounting tests. Except for the first one and two.
Oh, no worries.
There's no easy accounting tests.
Yesterday was all.
I'm gonna try to take pictures of that.
Except for that first one. That's kind of accepted.
Well,
Any, yeah.
Would you like to go to the Yeah. My brother's, well, so, he's getting 16? So my brother, he shaved, and then he started to that, he would accept himself way too much. Yeah, he has to shave it all the way. Because he can't, especially.
Is that better?
Send you the things this afternoon, and then
Are you?
All right.
I was like, oh, okay, you have your haircut.
You have problems operating my phone?
That was mine, I forgot it.
Take 3 pictures, 1 picture be good.
All right. So you guys, let's do this. Michael's taking one last picture, okay? Sure, thanks. So here's the other thing. So now we're back, here's the statement of cash flows. Now down at the very bottom, below this last one, you often, you find non-cash investing and financing activities. So for instance, suppose you bought land, nothing down, only a mortgage. That would show up down there, all right? It's because in that case, it would be an investing activity, no cash, right? So if you retire debt by issuing equity, okay, then that is, it's a financing, it's a retired debt, that's a financing activity, involves no cash, so you report it down at the bottom here, okay? Compare a conversion of preferred stock to common stock. Again, that's a financing activity, but there's no cash. Leasing of assets in a capital lease transaction. So again, you're acquiring an asset, but you're not spending any cash. So all of that revealed down here, and it's part of full disclosure. So these are investing and financing activities that involve no cash. Okay? And they're disclosed down at the bottom of the statement of cash flows. That'll cover all of chapter 16. So are you guys doing good? Okay,
So how do we get these into the cash flow or do we not?
they're just reported down here at the bottom. So it'll just have a title, like it'll have this title, non-cash investing and financing activities, and it would just list them. Okay? But Brandon, am I answering your question?
Yes.
Because what it'll do is it'll have down here, it'll have a title, non-cash financing and investing activities. And it would just list them, okay? And here's some of the things that might be included there. Now, when they have dividends payable, right, they might have, you might see them included down here because there's no cash. More often than not, they could be included here too, because they're going to be converted into cash that we send out so soon. So they can show up in either place. All right, you guys doing good? Nice job. So let's do this. In summary then, we have the statement of cash flows. And it has, oh, here, I know how to do this. Can I? So I'm going to stop this for just a second.